Do you think the central bank is adopting appropriate policy responses to deal with the current challenges being experienced now in the Forex market?
The major challenge that the central bank has is with its monetary policy. And so, to the extent that issue of inflation, for instance, what we have now, single digits, I mean, one of the objectives it set for itself is being able to achieve that. And the downward trend is not, I mean, should be noted. Secondly, it has tried to stabilize the foreign exchange market. And I mean, that to a large extent is being achieved. Because when you are able to drive speculators away from the market, then you are on the right path. Then thirdly, you see, the reality of it is that when you take a look at some of these indicators, you take a look at interest rate, inflation, growth, and all of those things, this economic, but the reality of it is that you cannot, the central bank policy cannot at the same time, provide solutions to the kind of solutions you are looking for. Aside from the central bank trying to do its best, there is a need on the part of the government, for instance, to take a look at ensuring that there is policy consistency with what the monetary authorities are doing. For instance, unemployment is something that is, so in an atmosphere whereby you have a very high rate of unemployment, then obviously you discover that productive capacity, is seriously constrained. So all of these are factors that are fundamental, to stabilizing that market.
Well, there's this debate, there's this school of thought that believes that the Naira is currently overvalued. Do you agree with this position?
Well, it depends on for me, I will tell you, my own position is that the exchange rate as at now is high. That's my position.
That's the Naira to the dollar?
Yes, but for me, there is a fundamental reason behind it. And that's what I said. As long as Nigeria remains unproductive, virtually everything you have in your house or in my house is imported into the country. And when you have the real sector that cannot produce because it is disadvantaged structurally, there is little or nothing that can be done, to reverse this trend. So until we start to address the fundamentals, that of infrastructure development, which will support the real sector of the economy and will become more productive, in which case we can produce more within the country and then rely less on importation. Take a look at the Greek sector as well, to the extent that the figure for importing rice alone is so frightening. So,
what about other sectors like manufacturing?
Yeah, I mean, there are all these there are a lot of what we call each sector is linked to the other. For instance, you talk about financing. Financing is one aspect of it, and that's why when even manufacturers they talk about high interest rate. But yeah, for me, interest rate is high, but interest rate is not simply determined by banks. It is determined by forces of demand and supply of Naira, in the system. And it's equally, aside from direct cost of fund, we also have what we call indirect cost of fund. Okay. So it's the lack of infrastructure is affecting all the sectors of the economy. Whether it is, you're talking of conglomerate, you're talking about the SMEs, or you talk about even the banks, we have to pay. We all have to pay a price for all of this, and ultimately, the entire economy is affected.
Yes, it's good that you mentioned that, because we noticed that the spread between lending and deposit rates in the banking system is generally over 10%, sometimes even as high as 15%. Is this healthy for the economy, and what is responsible for this? Well,
first of all, banks, they don't own their money. The funds you have in the banking system, which are deposits, aside from shareholders, for which are used to develop and open branches, acquire information communication technology, and then do some of the operational activities. The reality of it is that the funds that you have belong to depositors. And so if you put your money in the bank and you are asking banks to pay you 12%, you are asking the bank to pay you 15%, obviously there is no way that same bank will lend that money even at that same rate. It will have to build in something above that, and then before lending. Okay. And so as because of a general high cost of funds in the system, then obviously by the time the banks price their loans, then you expect it to be far higher than what you ask for as your deposit rate. So invariably, but it's not like I said, because the funds do not belong to the banks, they belong to depositors. You are assured of your principal and you are assured of your interest is again determined, by the supply of money into the system, which we talked about earlier.
Yes.
So if central bank, for instance, jacks up cash reserve, and then the part of the funds that were available for lending before is no longer available because that affects the volume of money for lending in the system, then obviously what it simply means now is that the borrowers will have to compete for the funds that are now available, which of course will be at a higher interest rate.
Yes. Well, let's look at how all these monetary policies have actually affected the interbank market and the rates at which they lend to each other.
Well, first of all, once a new policy is announced, and if it takes immediate effect, then you begin to see that effect immediately. But if there is a time lag, between when it is announced and then when the policy takes effect, then of course, first of all, people will react to the information in a mild manner. But once the policy takes effect, then obviously. So what has happened is that following the review of the CRR, we see it as another way, of mopping up liquidity in the system. And so when liquidity is mopped up that way, which is one of the instruments that the central bank can use. Don't forget that in addition to that, there are still some other instruments which central bank is using, on an ongoing basis. So, but the cumulative effect of all of those will result into maybe a given volume of fund in the banking system, and it is that will now determine, the rate at which banks will trade money among themselves.
Are we back to the era of round tripping in the Forex market?
No, we are not. I will tell you that, and that's why I say, once you are able to ensure that you drive out speculators in the market, because you could not, the way things are today, even when sometimes when the exchange rate is climbing, and then it's a little worrisome. What does CBN? How do they react? Immediately they come up and then intervene and ensure that the rate, is driven downwards. And so, if you are a speculator, for instance, you go into that market and then you sustain loss because you need large volumes of money to play in that kind of market. And so if you do that and you lose so much money, you are not likely to. So, but that is number one. Number two, what we have, the premium between the official rate and then the parallel market rate. The premium is still below the 5% international benchmark, which encourages speculators to go into that market. So as at in actual fact, it was about 4.63 last month, but as at this month, it's back to 4.53, which means speculators are not encouraged at all to do business in that market. So you can't have round tripping. But we must acknowledge the fact that there are a number of other factors that are driving exchange rate, as at this point in time. Apart from, foreign investors that we say were selling down on some of their investments and then they're moving. You should not forget that most of the developmental programs that the government has and they are funding, there is a large component of that which has to do with foreign exchange. So when materials are brought into the country and all of those, it will obviously result into a higher demand in the market. Then second, there is something that needs to be noted. Medical tourism as well as education tourism has become so major in Nigeria. You now, virtually the hospitals are, I mean, hardly do you have hospitals of excellence again. And then different kind of ailments with people having to go to India majorly and then some other countries just to seek medical help. This is gulping a lot of money, and that's why people are advocating, why don't you develop centers of excellence in this country and then save a lot of foreign exchange? Then education. Well, I mean, closing, I mean, in the last 3 months or so, I think ASU has been on strike. And so people struggle to ensure that, look, even if I have to spend a lot more money, you know, to keep my child in school for 4 years, 5 years, and then we know when it's going to get in, we know when it's going to be out of it, and they prefer that option. And so all of this actually have an impact in the foreign exchange market.